Welcome. In this video, can Xcoin make a boom from here? We will analyze it. Don't forget to subscribe, like, and please watch till the end to understand. One of the important structures on the chart is the downtrend structure, which is formed by the price moving downwards over a certain time frame. This type of structure usually indicates that selling pressure prevails among market participants and investors are cautious. However, it can also herald a period of change, because downtrends don't last forever. Every downtrend has a potential upside. At the moment, the price is very close to this falling trend line, and a break of this level to the upside could signal the start of a new bullish wave in the market. In this type of downtrend structure, it is critical that the price approaches the upper trend line. This is because these levels are usually the places where big investors keep a close eye. In technical analysis, such trend lines are considered dynamic resistances. And if this resistance can be overcome, it's a strong breakout, both technically and psychologically. When the price breaks this downtrend to the upside, it usually starts a new wave of buying in the market. This is because such a breakout is interpreted as the end of the downtrend, and buyers are starting to have a say in the market. Downtrend breakouts should not only be considered as a technical event, it also indicates that investor psychology has changed and the market is now more optimistic. Of particular note at this point is whether the breakout is supported by volume. If the price breaks this trend line to the upside and the trading volume increases significantly, this indicates that the breakout is not fake, and strong buyers are entering the market. This boosts traders' confidence and leads to more participants entering the market. Thus, the upward movement is sustained. In addition, a possible retest after a downtrend breakout, that is, the price bounces back to the trend line it broke and bounces up again, is extremely important to confirm this breakout. If the price bounces back to the broken down trend line and bounces back up again, this indicates that the uptrend will continue in a stronger and healthier manner. Such retest structures provide an opportunity for traders who want to take new positions and increase the confidence of existing position holders. It's also a well-known fact in technical analysis. Downtrends are usually the product of a consolidation process. That is, the market gathers energy by moving sideways or downwards for a while. This process can be seen as a preparatory phase before the start of a new uptrend. When the current downtrend structure is considered from this point of view, it gives the impression that the price is gathering strength for an upward movement. A breakout, especially one that is supported by fundamental or news flows, could lead to much faster and sharper rises. Another important point is to evaluate such downtrend structures on larger time frames. For example, a downtrend may be broken on the hourly charts, but if this breakout is confirmed on the daily charts, it will be much more permanent and effective. In the current structure, the fact that the price is approaching the short-term downtrend line and seems intent on breaking it could trigger upside signals on the daily charts as well. This creates a positive scenario for both short-term and medium-term investors. But we can't decide the analysis only with trends. Let's look at other metrics. Keep watching. One of the most important technical structures to note on the chart is an important support zone, where the price has already reacted multiple times and faced strong buying reactions. Such support levels not only reflect the past movements of the price, but also provide us with serious clues as to future price behavior. This currently observed support level stands out as a strategic area where buyers have strongly stepped in and moved the price up in the past. Therefore, if the price approaches this level again, the chances of a similar upward reaction are quite high. Support zones are the floor of the market in technical analysis. Just like a strong structure needs a solid foundation, a rising price action needs to be fed by solid support points. In this context, this support level has both proven itself with past price reactions and continues to exist as an element of confidence in the market. When the price reached this point in the past, sellers weakened and buyers stepped in and managed to move the price up. Now, the possibility of a similar scenario happening again is quite strong. This is because markets by nature react similarly to similar situations. This gives us a stable technical logic. If the price comes to the support level again, it is quite possible that a bounce will occur, similar to the price movements in the past. If there is a surge in volumes, especially when approaching this level, this could indicate that strong buyers are back in and starting to lead the market. Such volume-backed supportive reactions lead to increased credibility in technical analysis and are viewed positively by investors. Thus, both short-term and medium-term buying opportunities may arise. In addition, such strong support levels are also of great importance in terms of investor psychology, because when the price consistently reacts at a certain level, investors see it as a safe zone. This confidence leads to more buyers entering the market and a healthier uptrend. So this support level is not only a technical, but also a psychological barrier. For this reason, when the price reaches this area, it can be expected that buying pressure will increase, and an upward momentum will arise again. Another important point is that support zones get stronger over time. With each support contact and successful defense, the reliability of this zone increases. The support level we are currently observing is now much more solid thanks to its successful defenses in the past. This means that every time the price approaches it, buyers are waiting, and there is a high probability that the price will bounce back upwards. A similar scenario could play out this time around, especially if previous contacts have seen sharp buying reactions. As a result, if this strong support level, which the price is currently below, is retested, it is highly likely that buyers will step in again and move the price upwards, as they have done in the past. This support zone is an important backdrop both technically and in terms of investor psychology, and strongly suggests the potential for the price to bounce higher from this point. Successful defenses in the past suggest that this level will remain valid in the future. Therefore, this support zone may not only be a temporary stop, but also the starting point of a strong and sustainable uptrend. If the price reaches this point once again, it may face upward reactions again and follow a positive course, opening the doors to an uptrend that gives investors hope. One of the most notable technical patterns in the RSI indicator is the prominently observed downtrend. This downtrend shows that RSI values are under pressure, making lower highs over time, and momentum is weakening. However, this is also a signal that we are on the verge of a transformation. Because if this downtrend in the RSI breaks to the upside, it would signal not only that the indicator is gaining strength, but also that an important transformation could begin on the price chart. This is a very positive and promising development for traders. In technical analysis, the RSI indicator often reacts before price movements. This allows the RSI to function as a leading indicator. Although the currently observed falling trend line shows that the RSI is being suppressed at a certain level, the new momentum that will be generated by a break of this trend could result in a serious breakout and change of direction on the price chart. So an upside break of the RSI's downtrend is not just an indicator move, but also a break of the price's own downtrend. Therefore, this possible breakout in the RSI has the potential to have a positive two-way effect. This falling trend line on the RSI indicator usually becomes more pronounced during periods of price correction. However, such falling RSI trends don't last forever. After a certain period of time, this pressure ends and the RSI starts to move upwards again. We need to follow the trends in RSI. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.